Thursday, October the 17th. I'm Manisha Tank on the South Bank in London.
And I'm Pauline Chu in Hong Kong. Welcome to World Business Today.
The immediate crisis is averted. Washington makes a deal to reopen the government and raise the debt limit.
But there's still uncertainty ahead. Is Congress on course for a rerun a few months down the line?
And economists tally the financial damage after 2 weeks of stalemate as S&P says the U.S. isn't worthy of a AAA rating.
A collective sigh of relief has spread from Capitol Hill to the financial community. The U.S. has avoided crashing into the debt ceiling for now. Lawmakers in Washington decided late in the game to raise the government's borrowing limit and to end the partial government shutdown. The Senate passed a budget bill with just 4 hours to spare. The House of Representatives followed, and they voted it through a couple of hours later. President Barack Obama lost no time in signing the legislation. Investors outside the U.S. are getting their first chance to react now that the impasse is over. But European markets seem fairly unimpressed. Let's head over to Manisha to get a look at what she's seeing there. Manisha.
Yeah, you know, over here there is a relief in the air, but otherwise we have financial data that people are looking at as well, particularly in the UK, where we have retail sales numbers, which are going to get some attention, and also UK consumer spending. But what's really important is, you know, the UK holds this US debt, and it's among the top 10 that do. So a lot of people are going to be wanting to understand the credibility of the US rating. But, you know, we're in a really important place this morning on the South Bank. Behind me really is the financial heart of the city. This is where traders, investors, analysts are digesting this news from Washington. So we're going to be watching the markets very closely for more of an uptick as the hours move on. And like I said, we are one of the, here in the UK, one of the 10 biggest foreign holders of the US debt. So there's a lot of interest in terms of investment, not just and psychological investment, as well as economic investment in the American economy, Pauline.
Well, Manisha, here in the Asia-Pacific region, we see that, well, let's get back to Washington, actually. We were mentioning and recapping what had happened overnight. Things pretty much happened down to the wire. Let's get over to CNN's Erin McPike, who's been following the story and all the details hour by hour throughout the night. She's live at CNN Washington. Now, Erin, the furloughed workers do get to go back to work a Thursday morning, but this could be temporary, this sort of return to normalcy. Could we be seeing this paralysis again in 3 months' time?
Well, we will be seeing another vote on funding the government in mid-January. So absolutely, we could be at this point again, but President Obama said earlier this evening that he did not expect that to be the case. And of course, we've heard from a number of senior Republicans in the last few days saying, we know this strategy hasn't worked, so they may revisit the strategy in the coming months.
Now, a lot of data didn't come out over the 16 days that we saw this government shutdown. For example, we never got those all-important September jobs numbers, which investors really need and the Fed needs to look at before they make their decision when they meet at the end of the month. Furloughed workers are going back to work. A lot of agencies are going to get back up and running. But how long will it take to play catch-up and to get that important data out?
Well, that is hard to tell. What we can tell you right now is the government is reopened. It reopened as soon as President Obama signed the bill a little bit after midnight in the past 4 hours or so, and these workers will be heading back to work within the next 5 hours or so. As far as what it will take to get out some of that data, I mean, these workers have not been in their offices for the last 2 weeks or so. So it may be that some of those things take quite a while to get back up to speed.
Yeah, absolutely. And as you mentioned, there's still a lot of work to be done. For example, there's going to be a bipartisan budget conference committee. This was part of this whole deal that they would raise the debt ceiling until February, open up the government at least until mid-January. But this budget conference committee has to supposedly come up with some sort of an agreement by mid-December. I mean, we've seen this play out before. It hasn't been very smooth in the past. Is there much hope that the Democrats and the Republicans on this conference committee can actually pull something together by mid-December?
There is not much hope. We have heard a lot of doubt, actually, from Democrats and Republicans over the last couple of days about this. And Republicans are saying that they want to see measures on tax reform and on entitlement reform. It's hard to see that happening in the next 2 months, to be perfectly honest. And that's what a number of lawmakers are already saying about that.
Yeah, it feels like Groundhog Day, doesn't it? That movie where the same thing happens over and over again. All right, Aaron McPike, thank you very much. That's Aaron there live from CNN, Washington. And let's take a quick look at the Asian Pacific region and the markets there. They were the first to react to the news in Washington. They did rally, especially the Nikkei, up by more than 1%. But then things pretty much settled down. And then we ended the session today with a mixed picture there. So let's take a look at how things are going in Europe and what investors are saying there. Manisha.
Yeah, you know, it's interesting. We've opened lower here in Europe, and what I think people are probably going to be doing is going through the detail and looking for interesting clues about what's going to happen down the line, Pauline. A lot of people are already saying, well, it's one thing to resolve a problem today, but what happens in a few months' time when we have to readdress this? We don't want to find it's Groundhog Day and we're back in this situation again. Like I said earlier, we've got data that we're also looking at, but the big story, of course, is this debt ceiling and this crisis being averted. So let's see, as the numbers tick on during the day, what people make of this. A lot of people getting up this morning, the traders talking to their research departments and saying, okay, let's make head or tail in this and see what this actually means. About that data, I can tell you that we actually have had those numbers confirmed in the last few minutes. And retail sales in the UK have had an unexpected drop in August. That's going to be interesting reading for The Economist, looking at the UK economy, and forecasts had actually predicted a rise for September. So worth just getting that number to you while we can. So now that this deal is done, then people are asking whether the wave of investor relief will actually extend through the business community as a whole. A lot of questions to be asked. Thankfully, Kathleen Brooks is here with us on the South Bank to take a look at what we can expect. And she's a research director with Forex.com. Yeah. And I'm sure a lot of people you were getting a buzz of emails probably on your communication device. You know, what happens now? The markets are down. So what do you think is behind that?
Well, it's a very muted reaction. I think we saw a very strong reaction yesterday just on the hint of a deal. So we did see the S&P rally very, very hard. But I think it's no surprise that the markets have a muted reaction. As you mentioned earlier, you know, this is just can kicking. It's really kicking the can down the road. And we saw the same happened in Europe, and the markets didn't like it. The markets are still full of uncertainty, and that is what investors really don't like.
Now, the thing is, the US has always been looked to as this economic leader in a sense. There is still that hegemony, if you like, in the economic sphere. So when you have this political situation, which some say undermines the US's credibility overseas from an economic perspective, how would it make people here in Europe feel?
Well, you know, funnily enough, yes, of course, the US has taken a massive hit to its reputation, but this is a story that's going to play out over years, if not decades. The Treasury market is still the world's most important financial market. It underpins so many other financial assets that it's really unlikely that people are going to be ditching Treasuries anytime soon, because there's just no alternative to it. There's nothing as liquid as the US Treasury.
I'm really glad that you brought that up, because if anybody looks at holders of US debt over the years, if you look at the bar chart, you can actually see that sort of the intragovernmental holdings have fallen somewhat, whereas those international holdings have really increased quite significantly, enough for us to really pay attention. How much do you think of that foreign influence was brought to bear on the politics of the situation?
Well, I think they'd like to have thought that they had slightly stronger influence, actually. You know, particularly China, for example, largest foreign holder. We know China doesn't like uncertainty. They don't like things that rock the boat, and the Republicans went out there to totally rock the boat over the last few weeks. So in that sense, I think it definitely the impetus was there to reach a deal, but actually no. I mean, it would have been much better for those holders, especially for short-term US debt, to have reached a deal weeks ago and not leave it up to, you know, a couple of hours before we actually reach the debt ceiling.
Kathy, you know, there was one article quoting one of the very senior people at BlackRock in the US saying, we have CEOs on conference calls telling us that they're very nervous about investing right now, given the political situation on Capitol Hill. I'm sure that's also the case for foreign investment as well. How serious a problem do you think that is? Do you think that that's being undermined?
Well, it's a massive problem for growth. If people actually hold back and they don't invest, we've seen a really nice recovery the first half of this year, and it looks like the politicians may may have thrown it away. The one thing I would add, though, is that yes, the can's been kicked down the road till April. However, that is only a few months till the midterm elections in Congress. We know that the actions over the last few weeks have been very politically unpopular, so it could give some added impetus not to push it to this line like we saw earlier.
All right, Kath, as always, thanks so much.
Thank you.
It's always great to have you on the show. And thanks for clearing all of those points for us. Pauline.
Yeah, Manisha, you mentioned that BlackRock's officials were saying that there's just so much uncertainty. A lot of CEOs didn't know how to plan. We talked with the CEO of Marriott just a few days ago who was passing through Hong Kong, and he said he, along with several other CEOs, were just fed up with the political dysfunction there, and it was difficult to plan whether or not you're a domestic company or a multinational. It was just really difficult to plan too far down the road. Well, let's take a look at how the stock market here, at least in the U.S., are looking when the opening bell gets set to ring in about 5.5 hours from now. And futures are pointing down in negative territory. The guests earlier were saying that there's been sort of a muted reaction in the markets right now. This sort of typifies what she was talking about. Perhaps some of this is because of the potential of a sell-off once the opening bell rings, especially after we saw the triple-digit gains on the Dow yesterday. So we shall see what happens, but anything can happen in the next 5 hours or so. Manisha.
So large parts of the U.S. government were shut down for 16 days before Wednesday's compromise. And those 2 weeks of gridlock came at a pretty steep price for the economy. The ratings agency Standard & Poor's estimates that the cost at $24 billion. And it says that will slow economic growth for the fourth quarter by a fair bit. That's $24 billion. And by the way, that's roughly the annual gross domestic product of El Salvador, a whole country. Or another way of looking at it is that it's equal to the net worth of the poorest quarter of the U.S. population. And that really puts things in perspective. Just 2 years ago, the same agency, S&P, downgraded America's credit rating after the last brush with the debt ceiling. John Chambers from S&P spoke to CNN earlier.
The reason that we're at AA+ and not AAA, there's a couple of reasons, but the main reason is that the fact that you even have to worry about the U.S. government paying its debt on time would indicate that it's not the government's not worthy of a AAA rating. We think that we'll be back here in January debating the same issues, and that given the composition of Congress, that it'll be probably still acrimonious, and we'll just have to see. We'll have to see where we are then. But this is, I fear, a permanent feature of our budgetary process.
Yeah, I think a lot of people accepting things as they are. So you can see, Pauline, that the shutdown may be lifted, but clearly the fallout seems to be far from over.
Right. In fact, S&P was very clear with their statement saying that they also expect the coming holiday season to be a humbug season because they don't expect Americans to really open up their pocketbooks because they see that this whole movie could play over again come January and February. And of course, Americans won't spend if there is that uncertainty. Well, coming up, find out why one hedge fund manager says political play in Washington is becoming the world's new bellwether for markets. We'll bring you that interview just after the break.
One teacher enlightens an entire society, encourages quality education, and empowers minds.
My mission is to get the viewers to understand the world around them. People are starved for news about the world and context about the world. The show is able to appeal to people at every level.
Fareed Zakaria GPS, Sunday on CNN. Connect the world with Becky Anderson. Quest means business. Armand Paul. It's your new evening lineup tonight on CNN.
I don't have 31 in prom. 31 is like prom. We don't have 31 in prom, guys.
So Pauline, I'm just going to tell you that we're going to hear from Nina Santos with another view from Washington and what's been happening in the past 17 days. The stalemate has turned all of the U.S., all of us, in fact, wherever we are, into avid followers of what's been going on Capitol Hill. So Nina spoke to Lex Van Dam, who is an investment manager here in London, and she wanted to find out what's changed in the way that he thinks.
So, Lex, you run a hedge fund. What have the last 17 days been like? How is what's going on in America affecting the hedge fund world here in Europe?
Sure. I mean, it's kind of strange because suddenly we have to become experts in what's happening in the U.S. Congress, what's happening in the Senate. You know, it's not what we usually do. Every morning when we come in, we look at the U.S. newspapers, see what's going on. So suddenly, you know, all eyes on what's happening in American politics.
And all eyes firmly fixed on things like this. This is a US government 30-year bond, isn't it?
Exactly. So the issue is that interest rates in the US are going up anyway. So if you look here, the 30-year rate in April was 2.8%, and it's gone up to about 3.8% already. What worries me is that, you know, being abroad, not being in the US, that we're so dependent on the decisions of US politicians. So we are like a pawn in, you know, the political process. And if you're Japan or if you're China and you're lending so much money to the US, and this is the way, you know, it's being treated, then, you know, that is very worrying.
So how is all this, what's going on in America, affecting your portfolio?
Well, global markets are, like a lot of them, are trading at all-time highs or near all-time highs. But the underlying issue remains. The US is borrowing too much money. The Fed is flooding the system with cheap money, and debt around the world is just too high. And I think that when rates go up, you know, if this political process will lead to higher rates, then, you know, it will be very hard for global markets to take this.
How high do you think something like this can go before we really see a tipping point for America?
Well, I think the issue is not how high it can go. The issue is that how long can it be controlled? And at the moment, the Fed is controlling interest rates, short-term, long-term, by just buying and buying them. But there's a point where, you know, foreign investors who own 50% of the treasury market are going to say enough is enough.
So as a market participant, what's your message to Washington?
I would say you're playing with fire. US treasuries are the safest instrument in the world. If that stops being the case, then it's going to be very difficult to finance the US deficit. And then you will see what happens.
And what will happen?
I think it's the trust in the US will totally go away, and the growth of debt in the US is still 4, 5, 6%. So it's an unsustainable situation. Growth is being financed by debt, and it's not real growth. So it's like a mirage.
Playing with fire is certainly a telling characterization of Washington's gridlock. Van Dam went on to say that partisan bickering among lawmakers is also sending the wrong signal to its international lenders, something we talked about a little bit earlier. China and Japan are currently the two largest owners of American debt. Pauline?
Yeah, that's right. And here in the Asia-Pacific region, Manisha, we have about $3.3 trillion worth of U.S. debt. So this area of the world certainly has a lot at stake. Well, the budget compromise removes a big threat for investors who own U.S. debt. And just ahead, how the back and forth in Washington is playing out in our region here in the Asia-Pacific area.
Smart companies choose Germany. In Germany's capital region, we are building Berlin TXL, the Urban Tech Republic. We've got the space, the people, and the facilities to build a world-class network for science and industry, the ideal environment for creating solutions for the city of the future. Our location in Europe's fastest-growing tech hub will help us make Berlin TXL a major destination for urban technologies. Germany, smart up your business.
My voice, my story,
my life.
In South Africa.
In Kenya.
South Sudan.
Hear Africa's voices.
A way of understanding the world.
A dog to the soul.
In Africa.
In Africa.
In Africa.
CNN African Voices.
My name is Ziad Mahirsi. I'm a global health professional. I'm a social entrepreneur. Hear my story on CNN African Voices.
African Voices, Sunday on CNN in association with Glow. CNN original series Anthony Bourdain Parts Unknown, Sicily.
An octopus.
Cuttlefish.
Pancetta.
Leonata.
Oh, that looks good. This cheese. How do you say it in Italian? Swordfish. Looks like hell. Tastes like heaven. Smells good in here.
Chin. Caponata. That's old school. That's Sicily right there.
Anthony Bourdain Parts Unknown, Sicily, only on CNN.
Well, Congress slammed on the brakes in the 11th hour to avoid the U.S. hitting the debt ceiling, but the deal they've reached is still a short-term fix. Many commentators and lawmakers say Capitol Hill has just kicked the can down the road.
This deal kicks the can down the road.
We are kicking the can, but better to kick the can than to stomp on the can.
At the same time, we can't keep kicking the can down the road.
Instead of kicking the can down the road,
kick the can down the road.
And kick the can down the road.
And the problem is we continue to kick it down the road.
It's hard not to be cynical when we've seen the can kick down the road so many times.
We will continue to kick this thing down the road and with real harmful effect for the American populace.
Goodness me, the most overused phrase on Capitol Hill lately. Well, Wednesday's budget bill funds the U.S. government through January 15th and lifts the debt ceiling until February 7th. President Barack Obama denies we'll see a similar crisis next year. Well, between now and then, U.S. lawmakers have plenty of complicated and, of course, potentially contentious issues to deal with. The budget bill doesn't address a lot of matters that have Republicans and Democrats at loggerheads, like tax reform and changes to entitlement programs. The heads of the Senate and House budget committees meet later on Thursday to try to bridge some of those divides. They're also charged with coming up with a spending plan for the rest of the fiscal year. The former U.S. Comptroller General David Walker told CNN's Anderson Cooper there are plenty of battles ahead.
We have to agree on a fiscal goal. We need to get our public debt as a percentage of the economy down to about 60% by 2030 and be on a path to keep it there. To do that, you have to be able to reform social insurance programs, rationalize healthcare promises and better control costs, and do comprehensive tax reform. Those are the three things that it takes, and hopefully this committee will be able to get some progress in that area. You got to keep in mind, Anderson, our public debt is up 90% since President Obama was inaugurated. 90%. And President Bush 43 and Obama have had very poor records on fiscal responsibility, and we got to turn that around.
Well, for now, the compromise in Washington removes a threat that was hanging over holders of U.S. bonds. Their investments could have plunged in value if there had been a default. Now, China, as we mentioned earlier, is the biggest foreign holder of U.S. treasuries. In July, it had nearly $1.3 trillion of T-bills. Japan has $1.1 trillion. And the third biggest holder of U.S. securities is a group of 6 Caribbean banking centers, including the Bahamas and the Cayman Islands. And it's believed that it's mostly hedge funds that are there in the Caribbean. I want to bring in Klaus Botter. He's the chief economist for Asia Pacific at Societe Generale here in Hong Kong to shed some more light on what international investors really need to brace for. So we've got this resolution here now, temporarily. What is your main concern looking down the road from here?
Well, I think the key concern is that, as all these voices were saying, this hasn't been a comprehensive resolution. The next fiscal fight is already looming on the horizon. And the uncertainty whether the U.S. is really going to be able to, in a responsible manner, grapple with the clear challenges that lie ahead for U.S. fiscal policy remains unanswered. But I think, you see, adverse fiscal trends exist in many places, but you really don't have other nations who go around threatening with default. And that makes this very special.
And it makes it very special because it's the world's biggest economy.
Well, exactly. It's not just the world's biggest economy. It is also the supplier of the global reserve currency, of the deepest market, the supplier of securities that underlie so many financial transactions. And, of course, one has to ask the question, you know, is the U.S. political apparatus, A, conscious, and secondly, capable of taking the responsibility for running that kind of a responsibility? As you know, the Chinese party paper called for the de-Americanization of the world. That all sounds great, and I think that reflects the level of anger and concern that exists in the world. The trouble is, of course, not even the Chinese Communist Party has any idea how we're going to go about de-Americanizing the global financial system. But, you know, this is not confidence building, quite on the contrary.
And let's talk about U.S. Treasuries. Particularly recently, we saw the yields spike for short-term debt, but they've since gone down since we've gotten this resolution. But the bigger issue is the credibility of U.S. Treasuries. And I want to have you take a listen to Bill Gross from PIMCO, the world's biggest bond fund, and hear what he had to say about the situation after the resolution happened.
It means, you know, basically the hanging will be delayed until early next year. It also means, I think, and it's hard to put an estimate on this, Aaron, but it means our interest rates will probably go up by 5 or 10 basis points because of this delay and because of the repercussions of what we've seen for the past several weeks. If we pay, for instance, 0.1% more on our Treasury debt, Treasury bills, and Treasury bonds than we would otherwise, then basically that means the United States would pay $15 billion more per year in terms of interest costs.
Now, this is an economy that's trying to lower its $16.7 trillion in debt. So $15 billion may seem like a drop in the bucket. But the point is that, can the U.S. afford to be this reckless?
Well, until now, they've gotten away with it, and of course, they've gotten away with it with absolutely huge buying by the U.S. Federal Reserve. The situation, I think, becomes a lot more tense when the Federal Reserve eventually tapers, when it begins to reduce its purchases of bonds, when in that sense the market is going to be left more to its own devices. No, you see, there is no credible, the U.S. is showing absolutely no credible long-term fiscal strategy. None. And that is, of course, disconcerting. And I think if the world had a choice, they would go for that alternative. But the trouble is, the world doesn't have a choice at this stage to U.S. Treasuries.
Yeah, and despite the rhetoric that we're hearing from China, they really don't have a choice because they have so much in excess reserves. They really can't diversify that much because U.S. Treasuries really is the golden standard. They have to have a huge amount of that anyway.
They have roughly 50%.
Yeah. All right, Klaus Bader from Societe Generale, thank you very much for your perspective today. And World Business Today will be right back after this break.
Thinking of banking in Africa? Think Zenith. Zenith Bank PLC is one of the biggest banks in Africa, with about 1 million shareholders and over 300 business offices in Nigeria and subsidiaries in other African countries and the United Kingdom. Committed to the best possible customer experience. Zenith Bank, in your best interest.
The table is set for you to get a different view of China.
Join me for an intimate and revealing discussion with people who know China better than anyone.
This month on China, cracking down on political corruption.
You mentioned for the Chinese Communist Party, fighting corruption is a matter of life and death. Why is it a matter of survival for the party? Why is it that critical?
It's a view from the inside out. On China, Saturday, only on CNN. Expedition Sumatra. Philippe Cousteau leads us on an epic trek into a world under threat.
This really is ground zero for the global fight against deforestation.
Join Expedition Sumatra, Saturday only on CNN.
Information is knowledge, information is power, information is security. And I strongly believe our viewers, people all over the world, have real questions of their own. They want to know what's happening in their world, what it means to them, how it'll affect them. And so it's really up to us, once we get elected officials or anybody in public positions in front of us, to keep up the persistence to get out of them really what we're searching for.
Christiane Amanpour, asking questions that help you make sense of the world. Paul, tonight on CNN.
Aiming for gold. Join a global journey that ends at the Sochi Games. This month, get into the mindset of Olympic hockey players.
It's a different type of feeling that you can speak your native language all the time.
And
it was tough today.
it's extremely hard. Training for skiing in the summer. Aiming for gold. Saturday on CNN in association with Russian Railways.
Game-changing designs. Tech talk with top innovators. CNN.com/blueprint is the place to feed your imagination. New revolutionary products that could change your world. A place where cutting-edge ideas run wild and where experts give their perspective to a new generation.
It's an entrancing idea, and I think it's got commercial potential.
Step into the future at CNN.com/blueprint. In association with Lexus.
I'm Becky Anderson in London, and this is CNN. Live from CNN Hong Kong, I'm Pauline Chu.
And I'm Manisha Tank. We're live from the South Bank in London. A warm welcome back to World Business Today. So we can finally say it crisis averted. Furloughed federal employees are back to work today after Congress gave its blessing to a deal that will reopen the US government and raise the debt ceiling. But there is a catch. The new budget bill only funds the government until mid-January and extends the debt ceiling into early February. So leading lawmakers start negotiating a longer-term spending deal later today. Jim Acosta has this.
The motion is adopted.
Just as the nation was on the brink, the House of Representatives blinked and passed the bipartisan Senate compromise to raise the nation's debt ceiling. And after a 16-day shutdown, the federal government will come back to life, from thousands of employees returning to work in Washington to critical medical research programs, to national parks, even the Panda Cam and the National Zoo.
We'll begin reopening our government immediately.
When the end was in sight, but before the House had even voted, the president came out to say he's ready to work with both parties in the future.
I'm willing to work with anybody. I am eager to work with anybody, Democrat or Republican, House or Senate members, on any idea that will grow our economy, create new jobs, strengthen the middle class, and get our fiscal house in order.
House Speaker John Boehner gave the green light for the deal when he dropped GOP demands for big changes to Obamacare in exchange for an end to the standoff.
We've been locked in a fight over here trying to bring government down to size, trying to do our best to stop Obamacare, and we fought the good fight. We just didn't win.
Even some Tea Party-backed Republicans agreed the strategy failed.
The folks who said we were going to lose turned out to be correct. I can't argue with that.
But in a sign of potentially more battles to come, one of the architects of the Obamacare or bust plan, Texas Senator Ted Cruz, vowed to keep fighting.
The way we are going to stop the suffering, the harms that are being visited on millions of Americans is the path we have seen these past couple of months, is the American people rising up.
Cruz may get his wish. The deal only reopens the government until mid-January and pushes back another potential default to February. But the president told CNN not to worry.
Mr. President, isn't this going to happen all over again in a few months?
No.
Jim Acosta, CNN, Washington.
We'll see if that holds true. Well, the markets here in the Asia-Pacific region were the first to react to the news out of Washington, and there were green arrows across the board right after the U.S. debt deal was reached, but they finished with more of a mixed picture. Our emerging markets editor, John Defterios, joins me live here in the studio here in Hong Kong. Great to have you here.
Nice to see you in person, finally.
Yeah, finally. After speaking on the air for months and months, we finally are here in person. Now, when you were looking at the markets this morning, you noticed something interesting. What was behind behind the numbers that you saw?
Yeah, in fact, most of the focus was on the equity markets. We had a rally within the first hour, hour and a half. That faded away, but I think it was linked to the fact that the dollar-based assets, Pauline, didn't hold up well. We had a $5 rally in gold. That faded in the first 90 minutes. The dollar rallied against the Japanese yen, the euro, and the British pound. That faded away. We're trading down about 0.75% right across the board. And even gold rallied $5, along with oil rallying $1.50. All of that faded away today. So what is that telling us? Relief that a deal is done, and then waking up to the reality that it's not a long-term deal. It's January to February, and are we going to be back at square one going forward? And do you want to hold dollar-based assets? And the answer, at least in the markets today, is no.
So what does that tell you about the dollar, that there's just less confidence in the dollar? And does that mean U.S. securities are worth less?
Well, it raises the other question, too, and this is some of the comments you hear coming out. Does the U.S. really, at least U.S. congressional members, do they really appreciate the fact that China and Japan are big holders of U.S. treasuries? $1.25 trillion and Japan at $1.1 trillion. Huge holders, and they'd like to see clarity going forward, not being obsessed with the fishbowl of Washington. And that's the message coming through right now. This is the reserve currency. It's going to stay that way. But is it going to be a dominant currency for the next 20 years? Are we going to transition out to the renminbi? Is the euro going to have a bigger share in terms of euro bonds? That's what's happening with the Japanese and the Chinese portfolios. They're starting to shift away. And this just nudges them in that direction because of the uncertainty we see out of Washington.
And with news that we've had in the past week, we've seen China make moves to push out the renminbi. Now, Standard & Poor's has actually put a price tag on the damage to this government shutdown for the past 16 days. They say it's cost the U.S. economy $24 billion, but they didn't mention the intangibles.
Right.
In your view, what are the intangibles? What's the cost of that in terms of the credibility of the U.S. dollar and also the reputation of the U.S.?
Well, it's interesting. $24 billion in a $13 trillion economy is small, but it's going in the wrong direction when the global economy can least afford it. The developed world's only growing 1%, so it's not great news, but it's not a big number. I just came out of the World Energy Congress that was taking place in Korea and had a chance to speak with the Russian energy minister, who was a former deputy finance minister. Very strong, bold words, because I asked him directly, what did he think of the wrangling in Washington right now? Here's his quote. Unimpressive lack of unity right now was what he had to say. And he went on to say that it fractured confidence in American leadership. And I thought, okay, is this an isolated comment? So I went to the CEO of a big power company in South Africa, and he said, this is not the signal of a leadership that has the world's reserve currency. And politics are standing in the way of business. And when you start hearing businessmen suggest that, that means they're not interested in foreign direct investment going into the United States, but it's also the lack of leadership going forward. And finally, which I thought was interesting today, Christine Lagarde, the managing director of the International Monetary Fund, thought that she should weigh into the debate. Let's bring up her quote. And I thought it was not a very forceful support for what came out of Washington. She was saying, looking forward, it'll be essential to reduce uncertainty surrounding the conduct of fiscal policy by raising the debt limit in a more durable manner. But what is she saying here? She's suggesting in a durable manner, it's got to be something that's longer than 3 or 4 months.
Yeah,
and you can't let politics demand or dominate the debate that's taking place around the world. People are looking in from around the world, but the comments you hear from congressional leaders wouldn't suggest they're listening to the comments from the outside world. And when you're here in Asia, you hear it loud and clear.
Yeah. In fact, our guest who was on earlier in the show, he said, you know, the politicians, namely the Republican Party, did not shoot themselves in the foot. They shot themselves with a bazooka. I mean, that's how frustrated people are from the outside about the politics there in Washington. Now, looking back at big events, for example, the Lehman Brothers collapse and also the stock market crash of 1987, where does this government debt ceiling debate, the government shutdowns, these recurring bad movies, where do they stack up against some of these big single events?
You know, we're looking for longer-term trends, and I thought this was an interesting one that stood out, so I'm glad you brought it up. There's a group called PolicyUncertainty.com, and they've looked back at events going to the 1987 stock market crash. They're suggesting that the stock market crash, the first Gulf War, even the Lehman crisis, didn't nearly cause as much damage as what we've seen since 2011, with the debt limits, the budget debates, stretching out the Obamacare debate, because it goes right at the heart of confidence of the U.S. Treasury market and the reserve currency around the world. And it's protracted. It's not a one-off event that people think that the U.S. can deal with. They dealt with Lehman. It was a very difficult task ahead. The Gulf War, the stock market crash. But this has been dragging on too long, and it ranks higher than those others in the last 20 years.
Yeah, I hope the politicians are listening to that because those are pretty stark comparisons.
It's extraordinary, isn't it?
Yeah. John, fascinating to speak with you, as always. You always put things into great context. John Defterios, our emerging markets editor, here in Hong Kong in person. Manisha.
Yeah, Pauline, I wonder whether you're just enamored with the fact that the debt crisis has been averted, or just that John is in the studio. I don't know. Anyway, let's check on the European markets right now. And we've had this muted reaction here in Europe, people trying to take stock of what this means and perhaps really focusing on this whole movement of the agenda just a few months and wondering whether it's going to be a question of Groundhog Day in the future. Many people hope not. In terms of the markets and how they're moving, if you look at the major indices here in Europe, we've got the FTSE down around about 30 points or so. We've got the Xetra DAX down, 30.3%. We've got the Xetra DAX off touch more than 0.5%. CAC Caron also down, but the Zurich SMI moving up a touch. Let's bring in, though, without further ado, Isa Suarez, who's going to look at these European markets and how they're reacting to this resolution over in the US. She's live on the trading floor of CMC in London. Isa, what are people making of this?
Well, Manisha, very good morning. I think in many ways traders here are breathing a sigh of relief. I don't know if you can hear them. They're slightly more excited. You know, they're a bit more relieved, in fact, a bit more noise behind me than yesterday. I think for the past couple of weeks, they've just been staring at their screens, waiting for something to happen, for a deal to be done. But, you know, the markets, as you've just seen, they're pretty down across the board. I think we're seeing a bit of a sell-off, and we're expecting the sell-off to continue, told me one trade, until later on today, and then we'll see a bit of a rally to go Christmas, and then we're back again here, say January, February. But what traders were really telling me, you know, the markets have factored the deal will be done in late yesterday before the markets closed. You know, there were talks, there were whispers of a deal in the works yesterday before the markets closed. So this is already factored in. Another one said, you know, they knew there was going to happen. It would happen in the 11th hour. Not doing anything would be more damaging than anything else, Manisha. So on that regard, that's why we're seeing markets low. I also heard John Defterios there saying, you know, they want clarity, and that's the main point. They do want clarity, and I think that's what's sticking out every time I speak to a trader here. The deal that was done wasn't up to standards, so they say, you know, it's just a bit of sticking plaster that's been added, and they would like to see a long-term deal, so we're not back here talking about the lack of confidence in the US economy, and I think that's their concern, that come next year we're back here, and really at this stage when markets need clarity, this is what they're concerned about.
All right, and just, I mean, I was just checking on the numbers. We are lower, but, I mean, you track these markets all the time. Just very quickly, we're lower, but thankfully muted. We're lower, what is it, 0.3% for the FTSE. We're off about 0.5% for the Xetra DAX.
We're only down just a tiny bit so far today, so it's not too bad. But I want to show you a graphic very quickly, Manisha, that really paints a picture of how much they've shrugged this off, because as more of a political drama out of Washington. If we bring the graphic up, you will see that actually since the crisis began, so 1st of October, equity markets here in Europe have done particularly well. The FTSE up 1.7%, the CAC 40 in Paris 2.1%, the Xetra DAX 2.5%, and the SMI 0.3%. I mean, the SMI really underperformed a bit, more of a defensive. But you know, on the whole, they've done particularly well. They've taken it on the chin, and really, you know, they really knew that, you know, this is just political shenanigans coming out of Washington. That deal was going to be done. It was going to be done in the 11th hour, but they're not happy that the deal wasn't. This is just a short-term deal and not a long-term one, and this just puts more strains on the global economy.
Yeah, absolutely. Isa, thank you so much for that, updating us from the trading floor of CMC in London, probably not very far from where I'm standing. Pauline.
Well, Manisha, let's take a look at how U.S. futures are set to open in a couple of hours, and they are also lower because investors know that the current debt deal is a temporary fix and that the partial U.S. shutdown has already taken a huge financial toll on the economy. In fact, Standard & Poor's says it prices it at about $24 billion in terms of hurting the U.S. economy. Well, Maribel Aber joins us live now from CNN New York. So, Maribel, we've got this temporary Band-Aid for the next 3 months or so. What do you think traders will be focused on today?
Well, I think, traders will really be focused on market fundamentals. We said this earlier that all this deal has really been baked in already, right? Again, the deal that we've been saying all morning, this movie, that this deal will only last until January 15th, raising the debt limit until February 7th, and saving the country from defaulting on its bills. So we can look forward to this political back and forth in the not too distant future. Some analysts say a default threat could actually come back in February as the Treasury Department approaches its extended borrowing limit. Again, you saw Asian markets rose today. Nikkei rose 1%. Let's talk about here in the U.S. where futures are lower. As again, all this stuff has already been thought about. We've thought about the settlement and we've moved on. The Dow was up 200 points yesterday. NASDAQ and S&P 500 were up more than 1%. S&P was close to a record high there. And you mentioned Fitch Ratings again about this downgrade. They warned that we had this downgrade coming up. If the situation dragged on, we'll have to wait and see. It's within their purview as to whether that changes. Even though there was no default, though, as you said, analysts from Standard & Poor's say the partial government shutdown took a huge bite out of the U.S. economy, $24 billion. The rating agency projects that the U.S. economy will grow by an annual pace of around 2.4% in the fourth quarter. And, Pauline, the bigger issue, I think, is, what have we lost? What kind of growth have we lost that we won't get back? Pauline?
Yeah, in fact, Standard & Poor's had to lower their forecast for the fourth quarter because of this government shutdown. And they're also saying that they don't think Americans will spend that much this holiday season because they see that uncertainty around the corner into 2014. But for now, we've got the government open officially. We've got this temporary deal on the table. So investors can focus on other things like corporate earnings. What will they be looking at later on today?
Well, from an analyst point of view, again, they've been advising their clients all along, skip the headlines, focus on company fundamentals, adding that valuations and PE ratios on many of the non-U.S. companies are actually lower today when you compare that to U.S. comparables. Another analyst tells us that we're entering one of the most bullish times of the year. Don't forget, November, December, that tends to trend to the upside. The deal pretty much is baked into the market. But if you want to be optimistic, I think the hope is perhaps give time for lawmakers to work through a more permanent solution. But, Colleen, it's just a case of to be continued at this point.
Yeah, I think Americans and international investors are just plain fed up and impatient with the politicians there on Capitol Hill. Maribel, thank you very much. That's Maribel Aber there live from CNN New York. Manisha.
I'm glad Maribel's feeling positive about it. Coming up still on this show, the U.S. shutdown is over. The aftershocks, though, of the government shutdown are still reverberating. Tax collectors are neck deep in paperwork, but it's the taxpayers who are paying for this delay. We'll explain. Stay with us.
Living Golf Minute in time with Rolex.
Next month, Tiger Woods will be hitting a ball off the Bosphorus Bridge. This year, he'll be playing in the Turkish Airlines Open, a tournament with the full weight of the Turkish government behind it.
This is a very important event. Organising an event such as this one is no doubt going to contribute to the brand value of Turkey. In addition, to demonstrate the importance we attach to this event, this is going to be the event that will receive the highest amount of contribution from the Ministry of Culture and Tourism ever.
And so next month, a country with only 6,000 registered players will stage one of the richest events on the European tour. It's a symbol of where Turkey is as an economic power and where it wants to be as a golfing nation.
CNN original series Anthony Bourdain Parts Unknown, Sicily.
Our octopus, cuttlefish, pancetta, fionata. Oh, that looks good. This juice. How do you say it in Italian? Swordfish. Looks like hell. Tastes like heaven. Smells good in here. Chin. Caponata. That's old school. That's Sicily right there.
Anthony Bourdain, Parts Unknown, Sicily, only on CNN.
So furloughed workers may be back on the job in just a few hours from now, actually, but it's not just federal employees who felt the impact of the U.S. government deadlock. It is also taking its toll on other working Americans. Alison Kosick has the story for us.
I feel like I gave my checkbook to toddlers.
Mary Brady is feeling trapped. The refinance on her $260,000 mortgage is yet another victim of the government shutdown.
I know my problem might seem like a small thing. I'm just a cog in the machine, but to me, it's affecting a lot of other things.
The Connecticut nurse and divorced mother of two was scheduled to close on her refinancing last week, a run-of-the-mill transaction that would save her almost $600 per month, according to Michael Mination, her mortgage banker.
Credit history, job stability, equity in the home. I mean, you couldn't ask for a better loan.
At issue, a routine fraud report found that her Social Security number may have been compromised, and now the IRS needs to verify it. But furloughs at the tax agency mean there's no one there to do so.
The form's been sent in, and then we can't get anybody. I mean, there's no one to talk to.
That means Mary is missing out on cold cash, money she planned to use to fund her master's degree and home improvements.
Unfortunately, with this kind of up in the air, I might have to put those plans on hold. You can see they're difficult to open. I do everything I'm supposed to do. I get my bills paid, I pay my taxes, and all of a sudden I'm trying to do an improvement for myself, only to have them say, you can't do that.
Here's somebody that's, for no fault of their own, because this fraud alert was pulled and the government shut down. I mean, who would have thought, can't go forward with their lives.
Alison Kosick, CNN, New York.
And that's just one American of hundreds of thousands who were affected by this 16-day shutdown. Well, let's turn to weather now and talk about storms, and one storm after another. East Asia is dealing with an unusually high number of tropical storms this season. Meteorologist Pedram Javaheri is live at the International Weather Center with more. Pedram.
Hi, Pauline. I know you dealt with one of them out there in Hong Kong, Usagi, a couple of weeks ago. And, we seem to just be breaking this down. And I just want to lay out exactly what we've dealt with so far in 2013. Every single one of these lines, every single one of these colors indicating tropical depressions, tropical storms, typhoons. And notice just about everyone across this region has been impacted at one point or another. And in the past 24 to 48 hours, of course, one of the larger ones occurring across portions of eastern Japan. But look at what's happened so far in October. 6 named storms making it the busiest October since 1995. Japan getting the brunt of a lot of these storms. We had Nari go through Luzon, 2 million people without power there. Eventually pushed through Vietnam, causing some 120,000 evacuations in that region as well. But this was the most recent one, Wipa, that brushed by the coast of Japan, made landfall near area in just south of Tokyo there. But the damage across Tokyo pretty significant. Look at the images coming out of this region where we know some 500 cancellations taking place, some 50,000 customers without power. We know bullet train services halted across Tokyo on Wednesday. Winds around hurricane force, or 120 kph as well. And we know the services have now been restored, but you look beyond that, another storm. This would be the 26th of the season. Typhoon Francisco sits in place with winds at a Category 1 equivalent, 140. But the models do want to take this to the north, push it towards Oshima, an area we just had landfall in the past 24 hours. And this storm could really be a repeat performance of what we saw there. In fact, look at the footage coming out of Oshima in Japan. This again being about 75 miles or 120 kilometers south of Tokyo. We had significant damage. We know at least 40 people missing across this region, some 17 lives already lost, landslide, and also, of course, the gusty winds associated with the storm coming through this region. The amount of rainfall that came down here, Pauline, absolutely remarkable. 800 millimeters came down on Wednesday afternoon. That is equivalent to the amount of rain that Hong Kong gets from September all the way until April. 8 months worth of rainfall they saw in the past 24 hours. And we have yet another storm system we're going to be watching that is going to get uncomfortably close to southern Japan again there.
That is such an incredible figure. And you're right, we have experienced a lot of activity. And I was in the middle of a typhoon on a vacation in Kyoto just a couple of weekends ago. Yeah. It was really, really difficult. All right, Pedram, thank you very much for the update there. And World Business Today will be right back after this break.
Aiming for gold. Join a global journey that ends at the Sochi Games. This month, get into the mindset of Olympic hockey players.
It's a different type of feeling that you can speak your native language all the time.
And
it was tough today.
it's extremely hard. Training for skiing in the summer. Aiming for gold. Saturday on CNN in association with Russian Railways.
My voice, my story,
my life. In South Africa.
In Kenya.
South Sudan.
Hear Africa's voices.
A way of understanding the world.
A door to the soul.
In Africa.
In Africa.
In Africa.
CNN African Voices.
My name is Ziad Mahirsi. I'm a global health professional. I'm a social entrepreneur. Hear my story on CNN African Voices.
African Voices, Sunday on CNN in association with Glow.
So let's check on the European stock markets and see how they're performing in reaction to this deal being done on Capitol Hill over in Washington. And the reaction has been somewhat muted. All of the major markets here in Europe have been lower since the get-go. We have the FTSE down about 0.3%. We've had the Xetra DAX off about 0.5%. Here are the updated numbers for you now. The only major market which has been moving up here in Europe has been the Zurich SMI. In the UK, we've actually had some economic data to chew over. It was retail sales. We expected a bit of a pickup, but actually we got a bit of a drop on the retail sales numbers, which were coming out over the summer months, which were glorious months here in the UK. Often a time where you expect people to get out on the street and spend their money, but people will be poring over the data. But more importantly, the big story of the day, of course, Pauline, which is averting that debt crisis in the US and what that means now for the way forward over the coming months and whether they can really resolve these problems with the long-term planning about the funding of the US government.
Yeah, but the thing is right now, Manisha, reality is setting in. And even though we saw a rally here in the Asia-Pacific region in the markets here right after that resolution was confirmed out of Washington, we saw the markets kind of fizzle out and stabilize because the reality is that this is just a short-term fix. Let's take a look at the markets. The Nikkei rallied the most by more than 1%, but then it ended the session down by about 0.8%. In the end, by the end of the day, we saw a mixed session here. So, Manisha, even though we have a temporary relief right now, I mean, everyone around the world has been focused on what had been going on Capitol Hill. But I'll tell you, here in this region, and you have lived here in Hong Kong, so you know how much the growth here depends on what's going on in the U.S. China has been angry. It's been spitting out rhetoric about how the global economy needs to de-Americanize, and they've been pushing out their renminbi and cutting deals this past week. Japan has dumped a lot of foreign bonds in the first week of this month. We can presume that a lot of that was U.S. Treasuries. Also, Hong Kong took precautionary steps last week here at the Hong Kong Stock Exchange. It's saying that U.S. Treasuries were not going to be valued as collateral at the same amount as it had been, and that was really just to sort of just to protect itself in case the U.S. didn't come to some sort of a resolution, Manisha. So certainly international investors are watching this. And that's it for this edition of World Business Today. Manisha and I will be back in 4 hours' time with the opening bell on Wall Street. CNN Newsroom is coming up next.
40 years of progress, partnership and innovation. Patents help inventors bring new technologies to market, creating prosperity and jobs. Patents secure value through investment and licensing. Patents reveal the state-of-the-art, with millions of technical solutions free to access through our databases. Innovators strive for a better world. The European Patent Office supports them.
The table is set for you to get a different view of China.
Join me for an intimate and revealing discussion with people who know China better than anyone.
This month on China, cracking down on political corruption.
You mentioned for the Chinese Communist Party, fighting corruption is a matter of life and death. Why is it a matter of survival?